Welcome to the Midday Market Update for September 3rd, 2020, where we're going to talk about the freight markets. A lot of international talk today. My name's Kevin Hill, here as always with the dude, Michael Vincent.
Peace and love, everybody. Welcome to the show. It's an interactive event, so what are we on? LinkedIn, Facebook, right?
LinkedIn, Facebook, and those are the interactive parts.
Yeah,
and then,
those are the interactive.
Of course,
get your
FreightWaves
comments
TV.
and questions in it, like my esteemed colleague here, Kevin, said. So a lot of international talk, but really on the domestic side and the international side, if that makes any sense, because we're going to be talking with Chris Richards, who is international sales manager at Steam Logistics here in Chattanooga, talking about the international market and freight flows and capacity crunch and that type of stuff within the maritime industry and internationally. But also Ryan Houfek, who is CCO at Dcli, which is Direct Chassis Link, talking about the $1.8 billion? Or
yeah, $1.8 billion lawsuit that the ATA...
Overcharges for the ATA.
Yeah, overcharges.
Right, that whole lawsuit. And we tried to have him on last week, but we had some technical difficulty, so we wanted to bring him back because it's important information to get out there.
It is a very important information. He's very passionate about this issue, so it'll be a great segment. We have a great 30-minute show for you today on this, and I guess we can start it off with some of the headlines on FreightWaves.com, and about truckload volumes and truckload volumes from every angle now are showing strength. So some of those lagging indicators like the LMI. The Logistics Managers Index has finally turned. It's 4 to 6 weeks behind.
It has, and I've got some of those. You want to talk LMI here for a second?
Let's talk a little.
Because I have those. Let me pull it up. I've got the my ISM LMI dashboard in Sonar that you guys can throw up on the screen if you'd like to. We can talk to that for just a minute or two here. We're going to have our guest on here shortly in about a couple minutes here.
Yeah, we'll set it up.
So you want to talk LMI?
Yeah, LMI. So we're showing really strong truckload volumes, tight capacity, as everyone in the market already knows. And that trend is set to continue, and a lot of that has to do with the heating up and the hot activity of imports coming in from primarily Asia.
It really is, and we'll talk to Chris about that a little bit, right? Because there's some debate on whether we've peaked or not, right? But we've got our ocean dashboard in here too that'll show that there is a softening, but it's still above last year's numbers, both TEUs and total shipments, at least out for the next 7 days. They've come down, but there's still a slight rise there, and it's over last year's. But what we're looking at right here is you've got the Logistics Managers Composite Index in blue on the right-hand side and your OTVI. And you can see they're both are up on Tender Volume Index, truckload, and they're both on the rise here, right? And these indicators on the left-hand side, you're looking at inventory levels, the LMI inventory levels at a 58.08, which is growing and getting closer and closer to a 52-week high. You've got the composite measure, which is at a 52-week high. Transportation utilization is pegged at a 52-week high. Transportation pricing pegged at a 52-week high. Warehousing utilization is only 2 points off of a 52-week high. And warehouse prices, obviously, following suit.
It definitely is, and part of that is a replenishing of inventories. I think Todd Maiden had that story out on Monday based on Tom Wadowitz's UBS report showing that his thesis is that truckload demand will continue because of low inventory levels. I mean, they plummeted in the last the last survey. I forget what federal survey that is, whether it's federal government or the Federal Reserve, but they have the inventory levels.
Oh, the Fed surveys?
Yeah, the Fed surveys.
Yeah,
yes.
I've got that on here as well. Let me see if I can pull that back up.
Yeah,
if you
so
look
that's
at that real quick.
their thesis. That's that inventory levels have fallen off a cliff as well as consumers are buying tangible goods right now, shifting money away from kind of travel and leisure, and home improvement, as you know very well, has been a booming industry. So those low inventory levels speak to replenishing that, and that's something that we'll talk about with Chris Richards here in just a second, is those inventory replenishments are stoking the demand of imports coming in from China.
Yeah,
So,
absolutely, absolutely. And I've pulled it up really quickly. If we want to speak to it just really quickly, I brought up the Fed indexes. So I've got the Chicago, the Texas, and both current and future on the left hand side of this. And you're seeing all of them are green, different shades of green. New York is a slightly less dark shade of green, but they're all growing. They're all showing positive as far as.
You know who's going to give us some even better insights into those numbers is Chris Richards, who we have right now. How are you doing today, Chris?
Hey, I'm doing great. Thanks for having me, guys.
Oh, it's a pleasure. It's a pleasure. So this is Chris Richards from Steam Logistics, and can you tell our viewers a little bit more about Steam Logistics?
Yeah. So Steam Logistics was founded here in Chattanooga, Tennessee in 2012. We're an international logistics company that started as the international arm of Access America Transport, which eventually sold to Coyote Logistics and then subsequently sold to UPS. Our main focus now is international logistics, and our number one priority is to make sure that we get the customer's freight moving.
Yeah, I mean that's a good goal to have.
Especially now with everything the way everything's going.
It's got to be a challenge. It's got to be a challenge right now. So let's talk about that a little bit, Chris. So what are you guys seeing in the current ocean markets? We've got all these different predictions and people talking about different things. Have we peaked? Haven't we peaked? What's going on right now, Chris?
Yeah, so we have seen the ocean rates. It seems like a new weekly high, a record high every week. We're seeing rates as high as 3,700 for a 40-foot to the West Coast and as high as $4,500 to the East Coast. Now, back in April of 2020, these rates were about 1,700 to the West Coast and about 2,600 to the East Coast. So you're seeing an almost a $2,000 increase in just a few months, and it doesn't seem like those rates are going to go down anytime soon. We're thinking there's even going to be another increase here on the 15th as well.
And part of that is from April, March and April, there's a lot of blank sailings, a lot of canceled shipments, a lot of capacity on the ocean side taken off the market. Is that part of the reason why rates are so high, or are they rolling out capacity right now?
Yeah, so I think it kind of goes back to the beginning of coronavirus where there were a lot of blank sailings, and originally that's what was, increasing the price. Well, then I think now it's really the demand. So all the steamship lines have pretty much every service in line, but we're still seeing, rolled bookings, increased prices. So I think right now the demand, is just too much.
Yeah. So specifically, Chris, on the importers, what kind of challenges are these guys seeing? It's got to be really tough for them right now.
Oh yeah, it's super challenging. So as you can imagine, these people are trying to basically think about what the costs are going to be to their customers. So if they have, the ocean freight going up $500 every 2 weeks, that cuts into their landed costs. If we have fixed rate customers, they're not able to get all the allocation. The bookings are rolling. So at this point, we're really just trying to find that reserve space, working with our partners in Asia to make sure that, we're just getting the freight booked. So that's the number one priority right now with all of our customers, is just to make sure the stuff gets moving. The prices are ridiculous, but it's most important that they get it going.
So that's really interesting with the allocations that they had to put out there, and now they're kind of running out of those things. And that speaks to really the origin side, I suppose, right? What about once it gets here into the United States at the port of entry? How's things there? Is the congestion well, or how are things moving?
Yeah, so I would say recently, Long Beach, I think it's seen an increase of like 25%. So we've seen some huge port congestion. We had some chassis problems trying to get chassis, out of a port. There just wasn't any there. There's a major shortage. We're seeing congestion at the ports when the containers are getting moved onto the rail. So if any freight's going into the middle of the U.S., importers can expect maybe a week or two extra on all of this transit time, which could be, a big disrupt in the market.
So, Chris, we were talking right before you came on inventory levels and the the decrease, a massive decrease really in inventory to sales ratio and needing to replenish those inventories. Is that what you're seeing on the demand side in imports?
I mean, yeah, we're definitely seeing that. I would say that just over the past few weeks, there's been a major influx in bookings and just trying to get stuff out. I think before Christmas, everyone's trying to just get everything out.
Okay, very good. And so we were also hearing about a lot of backhaul problems, a lot of container shortages in Asia because of the influx of, the imbalance between imports and exports. How's that trending right now?
Yeah, so I have been having all my customers give me a 3 to 4 week booking forecast, because what's happening is if they give me the forecast right before, we're not able to get those chassis, or we're not able to get the equipment. We're not able to, book it. So basically, we're stuck in a situation where, like I said, I mean, we're just really trying to get it moving. And if we have enough time in advance, we're able to work with our partners in Asia to try all the different steamship lines. Try every option. Maybe if it's going to Memphis, we'll try to route it to Nashville rail. There's many things that we can look at to make sure that we do get that reserve space, we do get the equipment. We're just trying to provide every solution possible for our customers.
Wow, 3 to 4 week lead time on just the booking, Chris. How accurate can you be 3 to 4 weeks out? I mean, typically, what is it?
So, I mean, typically before it was, just 1 to 2 weeks. So we would send the rates. The rates are valid for about 2 weeks. So you try to book within that time. Well, now we're, telling customers, hey, if you have any kind of forecast, let us know so we can keep, working for all the different solutions. So that way it's not just, hey, this is all we have within the next 2 weeks and this is all we can do. We're really trying to be proactive about that and make sure that, like I said, we're just, the main priority is keep that freight moving.
What are your expectations? I mean, do you see an end to this strong demand going into peak season or beyond? I mean, what are your expectations for the remainder of 2020 into the first quarter of 2021?
Yeah, so I think right now the fourth quarter is very unpredictable. In my opinion, I think the rates will still continue to raise. I think the demand will still be there. I think we heard something about Lowe's, Home Depot, and Walmart are shipping 200% of what they expected to during this peak season. So that's really, tying up the space, especially for some of the, lower volume importers compared to them. That's one of the main reasons why we're seeing, such a shortage. But I think the demand will carry on until maybe November, December. And then once we get kind of closer to Chinese New Year, I think things maybe settle down. But as far as, I'm thinking that this is going to last all the way until maybe December, January. And then even then, it's unpredictable right now.
Wow, so you guys are a lot of sleepless nights and long hours, I imagine, trying to handle all this with all the disruption and the demand. What are you advising importers to do? What's your suggestion with importers, and how are you guys handling this situation?
Yeah, so as I mentioned, I think getting your forecast to us, 3 to 4 weeks in advance, so that way we can make sure our partners are working as hard as they can with the steamship lines to get that space reserved. Also Steam Logistics is very flexible. We're not like the other legacy forwarders where we just have, this one structure and that's the way it is. We're very flexible. We're very proactive. We're trying to provide as many solutions as possible. And like I said, that number one priority is to keep that freight moving, because the last thing you want is your customer's freight to get rolled or not reserved on the space, because then you're looking at even more issues. So cost is very minimal compared to receiving the product, right? I mean, you'll pay a little bit more to make sure you get the product, and the demand is there right now. So I think these steamship lines are taking advantage of it.
Keep that freight moving. Great mantra. Chris, it was great speaking with you. We'll have you on again. Great information. Love the segment. How do our viewers reach out and contact you in Steam Logistics?
Yes, you can find me on LinkedIn, Chris Richards, and then you can email me at chris.richards@steamlogistics.com.
Thank you. Great.
Excellent stuff. Thank you, Chris.
Fantastic.
Thanks, guys.
Always interesting. I mean, demand is picking up. Lowe's and Lowe's and Walmart is who he quoted 200%.
Yeah.
200% what they expected. You know, that's going to take up a lot of capacity. It's just a hot freight market right now.
Yeah, it is. It's absolutely crazy. Where I don't see an end in sight.
I don't either.
Because as soon as I look at the bookings in our ocean, we've got the ocean dashboard now in Sonar where you can see the bookings, not even stuffed in containers yet, right? The bookings on shipments and TEUs, they continue to outpace last year, and once you see a dip, then it comes back up.
Yeah.
I mean,
it's insane. So there's probably going to be a chassis problem, even a worse chassis problem than always.
Might be
and
fisticuffs in the streets.
I know.
What I hear.
And our next guest, Ryan Houfek, is very passionate about this issue and this $1.8 billion lawsuit that is being settled. So not being settled, but being brought.
Yeah, it is. Yeah. So, hey, welcome, Ryan. Ryan Houfek, COO of at Direct Chassis Link. How you doing, Ryan?
Oh.
He's laughing. I can hear him laughing this time. Tough entry. Let's try that again. Ryan Houfek, COO at Direct Chassis Link. How you doing today, Ryan? Thanks for being on the show, man.
I'm doing great, guys. Thanks.
There we go.
There we go.
Had me worried. I thought Kevin and I were going to talk chassis for another 20 minutes again. I have a feeling it'll be much more interesting.
We're good.
I think it'll be more interesting with you on this time.
Good.
Yeah.
Good.
Hey,
yeah. You guys did great last time, though. With you did well. You covered.
Well, we knew what a chassis was, so we did well. It's a good start. So quickly, a little bit about yourself, Ryan, and Direct Chassis Link, and let's jump into this topic that I know you're passionate about, and our audience really needs to hear your side and what's going on here. So let's jump into that. Can you give us a little bit of background?
I think it's a lot more interesting to talk about my company, Dcli.
Gotcha.
We're the largest chassis pool provider in the country, and we service both the marine side with 154,000 chassis coast to coast. On the domestic side, about 90,000 chassis on the domestic side, serving the intermodal industry. So these are all positioned at rail ramps and support the 53-foot container business, also coast to coast. So we provide chassis through pooling services through to the railroads, to trucking companies, to ocean carriers, and really all the stakeholders.
So, Ryan, can you give us a background of, we have a $1.8 billion lawsuit. I'd like to get your opinion on it. Can you start with a little bit of background on why this lawsuit is even coming about?
Yeah, so let me maybe just start by addressing what they claim is driving their efforts. And I'll get into they a little bit more as well. But what they claim is the current model, the current marine chassis model, lacks choice. And then only a gray neutral pool would deliver on, chassis quality, on lower prices, and trucker choice. And I think every stakeholder that's actually experienced the neutral gray pool that they promote know this is really actually not the case. And so, first, for many years, we've seen that where the neutral gray pool model operates, because it so dilutes the incentive for investment by its contributors, us for example, that they end up containing the poorest quality chassis in the country. And at the same time, the neutral pool manager that they're advocating for lacks all incentive to control costs. And so these pools that tend to have the highest operating costs relative to competing pools in their regions. They fundamentally lack the motives to excel and serve customers. That's what motivates us and everybody else in a competitive environment. Serve your customers. And so what they're asking is as an asset owner to put all our assets in just a big, broad pool. So we have no ability to distinguish our assets, to distinguish our company and our service. And so it's already been shown to be sort of an inferior model in its fundamental service to truckers, to ocean carriers, and to shippers. I know I'm running a little long on this answer, but let me address this issue of trucker choice, all right? That's at the heart of it. It's all sort of positioned as choice, but in reality, it's about money. All right. Today, truckers and shippers have more real chassis choice than they've ever had. They can use any one of several competing pools at operating markets. They can and have, fleeted up themselves with their own fleet. And I know if my chassis are of poor quality and high prices compared to alternatives, I'm going to lose business. I'm going to lose, to a competing pool, et cetera. So, The other issue with the gray pool solution, and I know I'm running a little long on this answer, but we saw where NACPAC, and we'll talk about them, attempted in 2018 to create the SSCP in the Southeast, all right? So trucker choice was essentially used to accomplish their true end game, right? And it was a monopoly. When they achieved it, trucker choice was gone. It was not part of their pool. And shippers ultimately rejected that before it was launched, but they're back at it again. They got a much more powerful ally with the ATA, and they're focusing nationally via politicians in Washington.
So in a nutshell, this is something that has been attempted before and rejected, right? It failed. Because you're talking about you can't distinguish your fleet, you can't maintain your fleet, you've got no incentive to really drive there, to drive efficiency, even tracking of the chassis. So I would imagine, just the efficiency of moving these chassis and making sure they're in position for your customers, et cetera, is that drive is pretty much gone, right?
Well, yeah. I mean, so like we're very good at what we do, and when you take all of our assets and take us out of the cockpit and sort of put it into this neutral third-party manager that doesn't have the incentive to serve our customers. If I don't serve my customers, I know what happens. I lose my customers. It's just like every business in a competitive environment learns the hard way sometimes. You must excel, be constantly improving, or else someone's gonna get your business, and that's lost in this outcome that they seek.
Yeah, it takes the branding and differentiation away, and the management as well. So this kind of sets the stage for the lawsuit, right?
Yeah.
And what exactly? Who are the parties in the lawsuit, and can you break that down for our audience? Because
Sure.
There's a lot of acronyms in there, and unless you're in the ports, it's hard to follow.
Yeah, let me do that. A great question. So really, at the core of the suit is the ATA, the American Trucking Association. So let me kind of break it down. I think this is going to be eye-opening for you. When we talk about the ATA, we got to look sort of one layer down to their IMCC committee. All right? These are the ones formally behind the suit. The IMCC committee's board is majority composed of motor carriers that are the owners of NACPAC. NACPAC is a chassis company, and they are a direct competitor to DCLI, to Track, to FlexiVan, right? So my competitor is deploying the ATA to essentially try to socialize the national chassis model in a way that catapults my competitor into a very lucrative lead position in the market, right? So this isn't about serving the interests of thousands of draymen out there, rather a very, very small subset of them that own NACPAC. So NACPAC wants to be a major chassis provider like DCLI, but we spent almost $2 billion to get here. We employ hundreds of people. We have a network of 400 start-stop locations across the country. That's how we got to be a major provider. And they want to dominate the market by essentially nationalizing it without making those investments. And so as I'm going to point out today, this is really a huge money grab attempt. And if it succeeds, we think the consequences to the vast majority of truckers is actually going to be pretty bad.
And what are those consequences that would happen here? What's the slippery slope we're sliding down right now?
Yeah. So ultimately, this is about investment drying up, right? And so I think I'll try to explain that a little bit. But as investment dries up, you essentially would have over time fewer chassis. You're going to have lower quality, and then ultimately, the prices are not going to go down for shippers. That's not what this is. Monopolies don't behave that way. And so on the other hand, the proprietary pool model that we advocate for, that we operate, we're rapidly upgrading chassis, right? From lousy bias ply tires to radial tires, from incandescent to LED. And for the oldest chassis in the fleet, and there's some old ones out there, we do full refurbishment. You ought to see the before and after on those. It's really amazing. And so the benefits that are being attached to this idea of a neutral grade chassis pool, they don't come with that kind of pool. And they absolutely are delivered by the companies like DCLI and the proprietary pools we manage. So if you take a market like Houston, for example, right, you have several proprietary pools competing in a growing market. All right, motor carriers tell us they value equipment reliability most of all. And so last year once we exited the neutral grade pool and we set up our proprietary pool, we made the commitment to convert 100% of our chassis in the market to radial. It's about a $20 million investment to convert 12,000 chassis. Our competitors are doing the same thing. And so what I'm saying here is that there's some bad unintended consequences of forcing chassis owners to place their assets into these gray pools. And I know, again, I'm getting long again, but I want to make one more important point. And this is coming from truckers, so I'm sort of channeling this. The open choice gray pool leads to the motor carrier being cut out of the chassis procurement process. We see entities like freight forwarders insert themselves into these pools as a way to cut their costs. Right, so they go deal directly with the chassis provider. They cut out the trucker. But guess who keeps all the liability and all the safety consequences? Right, the trucker. And they lose a nice little profit stream that they make on our chassis. Right? So they want safety, we want safety, and if the ATA succeeds here and gets their great pool with open choice, freight forwarders and NACPAC, they siphon the profits away from us, the chassis investment tanks, and motor carriers are left without margin on chassis and lousy equipment. And I encourage you to talk to truckers about that. That's sort of lost in the ATA claim.
Now, and I certainly get your points. I want to read you the ATA's response or from the press release about the lawsuit, and I'll let you respond, but it's important to have both sides of the issue here presented. For more than, and this is from ATA's Executive Vice President for Advocacy, I don't have his name right here, but for more than a decade, these foreign-owned companies have worked together to take advantage of hardworking American trucking companies, said Bill Sullivan, ATA's Executive Vice President in Advocacy, in a press release. And he goes further to say, by denying truckers choice of equipment providers at port and inland locations, these unscrupulous companies have been forcing American truckers and American consumers to subsidize their cost to the tune of nearly $1.8 billion over the last 3 years alone. So I'll let you respond, and then we can wrap from there.
Yeah. All right. So we know that truckers take our pool chassis rental rates, and they mark them up significantly to their end customers. In fact, we did a quick search of various IMCC members' websites. And these are our antagonists here. That reveals that not only are they not being harmed, as you sort of pointed out there, but when they choose to use a pool chassis, that the drayage industry is actually profiting on our assets to the tune of $200+ million a year. So they don't make any investment. They have no financial risk, right? No utilization risk. They take our pool chassis bill and they mark it up 25 to 50% to their customer, usually the shipper. We've had drayage operators tell us they make more money on marking up our chassis than they do on their core drayage services. Right? So we buy the chassis, we pay the M&R, we bear the operational risk. The motor carrier marks it up 25 to 50%. So guys, ask me how much motor carriers earned on chassis back when ocean carriers owned all the chassis.
Okay. How much did they make on chassis when the ocean carriers owned the chassis?
Zero. All right. so that truckers now earn a margin on our investment and at our cost is actually fine, right? We don't begrudge them for that. It's actually a pretty copacetic arrangement. They make some money on our assets. By marking up our rates. We're still earning enough to invest in the fleet, and there's some balance in that. But for NACPAC and its members, it's not enough. At the end of the day, this lawsuit is about greed. It's about wanting more. I get that, right? We want more too, but the problem is the consequence if they succeed, which is really the complete implosion of investment into safety. And so all that said, the $1.8 billion and the unscrupulous and all those things is really kind of a head scratcher.
That's really good stuff. Thank you so much for that, Ryan. We've got a minute left here. We're gonna have to wrap, but a pleasure having you on the show, and thank you so much. Very interesting and important topic. How do people reach out to you and DCLI?
Yeah, so ryan.houfek@dcli.com. Houfek is Houf like Frank EK.
Excellent. Thank you so much, sir.
Thank you.
Thank you, gentlemen.
Interesting stuff.
Very interesting stuff. A lot of good ocean knowledge and expertise on this episode of Midday Market Update.
Yeah, absolutely. Absolutely. And you know where you can get some more really, really good information and see some really great speakers like Jim Crane as a keynote speaker of Crane Capital, Crane Worldwide Logistics, owner of the Houston Astros.
Yeah, I bet you said.
And also
FreightWaves
Gene Soroka, who is also, Port of Los Angeles, is at the Global Trade Tech virtual event, the 16th and 17th here at FreightWaves.com.